Hello, I'm Robert Hallums. I'm the founder of Experts for Expats. Joining me today, I'm going to be talking to Jamie Favell from Tax Advisory Partnership. We're recording these conversations to basically inform expats and people who have interest in international mobility matters. And with the new UK tax year just around the corner, I wanted to bring a tax specialist on. I've worked with Jamie since about 2014, I think. Jamie's got a wonderful expertise and experience over the last couple of decades around international tax, UK tax, and is one of the partners at Tax Advisory Partnership. So I would like to pass the floor to him and introduce himself formally. And also, Jamie, if there's one thing that you wish people knew about what you do, what would that be?
Thank you, Rob. Okay, so by way of introduction, I'm a partner at Tax Advisory Partnership, also known as TAP. TAP has been around for about 15 years now, and we have focused on advising expats, non-doms, internationally global kind of private clients, everything kind of in between, where there might be some kind of international element to a person's tax affairs. So UK residents, non-residents, people moving around the globe to work, etc. Is there one thing that I wish clients knew before we speak to them? I think there's a misunderstanding with regards double tax treaties, and I wish that people understood that declaring or having tax in one country doesn't give you protection under a treaty. We come across so many problems where we have people with assets in another country that believe that because they're paying the taxes in that territory, that they don't have an ongoing obligation in the UK because of a double tax treaty. And they often tie themselves up in knots and get in big problems, because the way a treaty does work is that you file in both jurisdictions, but the treaty will dictate which country has the primary taxing right and which is going to give a credit for the tax that you've paid in the other jurisdiction. So I wish more people knew that, although we do a lot of work unraveling these problems. So maybe it's
But I mean that in itself is like it's a nice little segue into the new tax year, right? So if you leave the UK, and you don't think you have a responsibility to the UK, then you pay less attention to things like the spring statement that we've just done or the end of the tax year. So with that in mind, like we've got changes coming, right? A year ago, that it was announced that the non-dom scheme was going to be abolished. With that came inheritance tax changes, changes around how foreign nationals can be taxed in the UK, but also people who've lived outside the UK for a long time. So just briefly, what are the kind of like big changes that have come in over the last sort of 12 months that people really must be aware about next week?
There weren't any changes announced in last week's spring statement, and we hadn't anticipated many really. That was really focused on spending and trying to fill the tax gap, and perhaps investing in various methods to collect more tax in order to fill that tax gap. So the changes that are coming into force from the 6th of April were all announced in the Tories' last spring budget and Labour's first budget last autumn. And they are introducing the most significant changes that we've had for the taxation of international private clients for many years. It's a huge sea change. So the concept of non-doms is being abolished from the 5th of April. So if you're a foreign national in the UK and you consider yourself non-domiciled for that purpose, and you've been claiming the remittance basis of taxation, you no longer can from the 5th of April.
Just so quickly, from a non-dom perspective, because obviously the media and whatever talk about non-doms, and loads of people have like this perception of what a non-dom is. Non-doms avoid tax, non-doms don't pay tax in the UK, blah 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 blah. What? So just very briefly, but what exactly? Who is that? Like when people are talking about this and they kind of have this negative thing about these people don't pay tax in the UK. Who exactly are we talking about?
So a non-dom could be any expat worker that comes to the UK, as well as the fat cats that the press like to try and target. So you've got the full spectrum. The rules are in place to, or what were in place to attract foreigners to come into the UK. Now, they might have been foreign expat workers coming here for the first time, or they might have been wealthy foreigners that are coming to the UK, perhaps not working here, but coming here, living here, investing here. So the press have been on the bandwagon for, the wealthy, ugly archetypes, whoever they might be,
Yeah.
or,
Like
the
if like, you kind of get that if there's
billionaires of the world.
yeah, you kind of got like get occasionally it's just like, oh my God, this person's not they're not non-dom. Oh my God, I can't believe they're not paying tax.
Yeah.
And
Yeah.
like it just creates that really kind of negative vibe
Yeah.
when actually it's a completely legit thing,
Yeah.
right?
Almost all foreign nationals living in the UK are non-doms. So as a result, a lot of those will be impacted because, these rules have attracted talent and smart people to come and want to work in the UK, whether that's in the city or in Cambridge, in sciences, whatever it is. We've had these rules. We've wanted to attract people. Now, with the abolishment of the non-dom status, I think that will have an impact for the wealthy that the press don't like. And some of those wealthy non-doms might choose to leave, if they're long-term UK resident and they are tax motivated, they might choose to leave.
So have you like over the last 12 months since this was announced, have you seen people like coming to you and actually looking to leave?
Yeah, absolutely. Yeah. So clients are leaving have left the UK. Some have headed for the Middle East, some for other jurisdictions in Europe that have similar or equally kind of favorable tax treatments to the UK. The UK wasn't alone in wanting to attract talent and wealth to our
Well, it
shores.
creates jobs, right?
Yeah, absolutely. It creates jobs. All that inward investment and everything else. So the UK wasn't alone. So some are now leaving to other countries which are looking to attract that talent pool and that wealth. Whether that's Italy, France, Switzerland, further afield out to the Middle East, to the UAE. Some are choosing to leave if they're tax motivated. Not everyone, thankfully, because some people, once they have their roots here, it's more difficult to leave. Perhaps once you're settled, have a family and kids in school and what have you.
So presumably, like we know that it's been replaced with something, right? The non-dom scheme's gone, it's been replaced. So what is it, and how does that affect people?
So just to rewind slightly, the non-dom regime had a shelf life of about 15 years, and how useful that was depended on your wealth and your status, your employment status, and what have you. That the new regime that's replacing it is the foreign income and gains regime, or the FIG regime, and that has a 4-year life cycle. So if you haven't been UK resident for 10 years, come to the UK for the first time after 6 April 2025, then for the first 4 years you're here, it's really attractive. You won't pay any UK tax on your overseas foreign income and gains, and those monies can be brought into the UK. And if you're an expat worker in that 4-year period, you can claim something known as overseas work days relief, which will allow you to exempt your or relieve your non-UK work days from UK tax. So you might come to the UK and work here for a UK employer, but spend half of your time servicing clients outside of the UK, somewhere else in Europe or further afield. Then, if that's half of your time, then you could potentially exempt up to half of your income from, or relieve half of your income from UK tax.
Overseas workday relief was in play before, right? But it was under the non-dom scheme. So that it's just that it's reduced the amount of time that you can apply it for, or
So overseas work days relief is more generous under the new regime. Under the remittance basis, you could claim it for up to 4 years.
right.
And there were very, really prescribed conditions on how you had to operate with regards being paid into an overseas bank account and stuff. It was quite complicated. Now it's been simplified to a certain extent, and you have a 4-year window. Sorry, up to 4 years that you can claim the relief in.
Okay.
Yeah.
And in terms of like, so from what I understand from what you've just said, basically in that first 4 year period of FIG, actually, it's a better regime. So, no, if you bring money into the UK, it isn't taxed under UK tax rules. Whereas under the non-dom scheme, if you remitted money into the UK, then it would be subject to UK tax rules, right?
Yeah, this relief is designed to attract people that haven't been UK resident in the previous 10 years. And in those first 4 years, it's really generous. Yeah, the remittance base is on steroids because you get all the benefits for those 4 years, but you can bring the monies into the UK.
So just think about that, just like generally. So if someone actually wanted to set the UK up as their home, like someone from I don't know, Middle East or wherever wanted to set the UK up as their home, and they already knew that actually, yeah, do you know what? I want to be UK. I want to be. Could they remit in that 4 year period? Could they bring all of their wealth into the UK and avoid income tax on that? So the intent is, for all intents and purposes, rather than trying to keep money outside the UK and going, well, actually, I'm not paying tax on that. It actually encourages them to say, well, I'm committing to the UK. I want to live here, but I need to get my money in. Is that fair?
That's fair. It's not quite the all of that person's pre-arrival capital they can bring into the UK anyway.
Right.
Because it should, if it's in cash, it's clean, you can bring it into the UK.
Okay.
What we have to do for that person under the old remittance basis regime is go through a UK entry planning exercise. And they might have, if that is their plan, is to bring everything into the UK, then they'll have to do a bit of restructuring in advance of arriving here. Now, what that person could do is come to the UK and plan their restructuring and their investments, etc., whilst they're here without triggering taxes. So
Okay.
it makes the transition much more straightforward.
So I mean, because I looking around social media and everything like that, and obviously loads has been spoken about over the year. And obviously there are the non-doms in the UK that like that kind of is there like a window for them, like non-doms or the people under the old regime to like try and take advantage of this new regime so that it doesn't scare them away? I know that it's quite late. And I know that it's coming in a week or so, but is there like a period whereby it's actually, well, if you want to stay here, this is what you need to do and do it quickly because, well, actually, by the end of this period, yeah, you are going to get stung unless you leave the UK.
Yeah, so there's a few things to talk about, I think, Rob. The Some non-doms are already here and may have only been here for a year or two. Those people might still qualify for a year or two of the FIG rules,
Right.
depending on when they arrived. So providing they'd had 10 years of non-residence prior to arrival, they would still potentially qualify for foreign income and gains for up to 4 years. They've already had 2 years, perhaps under the remittance basis regime. They might have another couple of years that they can opt into the new regime. And then for non-doms that are impacted by these rules and are staying in the UK, there's some transition rules being introduced, and they're designed. One of the issues that we've touched on already with the remittance basis, because you couldn't bring your foreign income and gains into the UK. You'd have a big pot of cash, perhaps, that had to stay outside of the UK. So if you remitted it, it would trigger taxes of up to 45%, maybe. So to transition into the new regime, a new set of rules referred to as the TRF, the Temporary Repatriation Facility, have been introduced. And for the next 3 tax years, starting in April, those non-doms that are still in the UK that have this mixed fund issue of funds overseas can remit those funds and designate them under this TRF facility and pay a lower rate of tax. So maybe if it was 45% before, you can remit and pay 12% tax. Yeah, that kind of changes over the next few years, but you get a fixed rate. It's a certainty in order to attract the monies to come into the UK. There is also a rebasing facility. So if you're a non-dom and you remain in the UK, if you held assets outside of the UK on 5 April 2017, you can elect to replace the actual cost of that assets for its April 2017 value.
Okay.
May or may not be of use, but that's there too. they're the main transition reliefs. Originally they were talking about there being a further soft landing with exemptions and what have you, but they didn't get introduced. They were ruled out by the Labour government.
So, I mean, so that's quite, I mean, that's a huge change, right? That's a big shift. Other thing that I've seen is that inheritance tax. So obviously that side of things is talking more about non-doms, foreigners coming to the UK, but inheritance tax rules have changed as well, haven't they?
Yeah, so if you were non-domiciled in the UK, you didn't really have to be so concerned with UK inheritance tax. Non-UK assets were excluded property for inheritance tax purposes, and the rules didn't really change until you'd been here for more than 15 years. And if you hadn't done any planning prior to that 15th year. So a lot of non-doms could plan and really mitigate their UK inheritance tax exposure. What we've got now as part of this reform and aligned with that kind of 10-year rule is once you become UK resident, if you've been UK resident for 10 years, you're then treated as a long-term resident and subject to UK inheritance tax on your worldwide estate. So some non-doms have left the UK prior to the 5th of April to avoid this
Yeah.
new regime. And once you have been here for more than 10 years, when you leave the UK, you're potentially still subject to UK inheritance tax on your worldwide estate for a certain number of years, depending on how long you'd been resident here prior to your departure.
So it switched because the thing that I understood is it was based inheritance tax was based on your domicile. So that's switched now. It's now more based on your resident status, whether or not you were tax resident. So does that apply for British expats as well?
Correct. Yeah. Yeah. All of these rules, whereas the remittance basis regime didn't apply to a Brit or someone that considered they had a UK domicile. These new rules are a catch-all for anyone that has been non-resident for 10 years. So British expats that have left the UK, been working in the Middle East or wherever it might be, if you've been gone for more than 10 years and you come back, you'll also be able to opt into this 4-year foreign income and gains regime, which is a real benefit.
Yeah, so I mean, and also presumably if you've lived abroad for 10 years, then you so it used to be that inheritance tax would follow you no matter what, right? So if you left the UK when you were 20, built up a huge estate, um, decided that you wanted to go to, I don't know, Switzerland or wherever else like that, you got to 90 and you thought, okay, well, inheritance tax is going to follow me around. I'm going to have to pay UK inheritance tax. Obviously, I believe there are structures that people could use, but the general vibe was that yeah, you'd have to pay inheritance tax in the UK of 40%, etc. Whatever. I'm not a tax expert, so I'll leave the numbers to someone else. But now, if someone left, say, well, what are you now, 2025? So if someone left in 2014 and lived abroad, built up a huge amount of wealth, that's now not subject to inheritance tax because they just haven't lived in the UK. They're not a tax resident. Doesn't matter if they're British or not now, and they're free of inheritance tax requirements. So it's actually an incentive. If you've got a large amount of wealth in the UK, there's actually an incentive to kind of move abroad. But similarly, if you are British and have lived abroad and you're kind of like, well, I miss it. I'd like to come home, but maybe you're reaching the end of life. There's kind of a benefit to actually coming back to the UK. Is that my overcomplicating it? I don't know.
So under the old rules, you could leave the UK and acquire a domicile of choice somewhere else, but then that would involve having to notify the UK tax office of that. Often they challenge those claims that you've changed your domicile to another region. This is all just matter of fact based on the 10-year rule. The one point to make clear though is obviously UK assets remain in the UK inheritance tax regime regardless of your 10-year resident status.
Okay.
So if you've been out for 10 years but actually all your wealth is in the UK, that's still going to be subject to UK inheritance tax. If you've got a UK investment portfolio or lots of cash in the bank here. But yeah, if you've been out for 10 years, all your assets are outside of the UK. Even if your only passport is a British passport, the UK aren't going to try and touch you won't have any right over your estate.
Okay. So that leads me on to like another side of things. So I saw that TAP posted recently about how capital gains tax, there's a crackdown on capital gains tax. So especially around, I would imagine, non-residents, because if we go back to what we said right at the start, lots of UK people who've left or lots of British people who've left the UK suddenly I don't have to pay UK tax. So presumably their first thought is, well, I can sell my second property in the UK, no capital gains tax. That crackdown, that you're seeing a crackdown from HMRC on that. So presumably that also impacts people who are thinking, wow, do you know what? I've seen these new inheritance tax rules. I'm just going to sell up everything in the UK and move it out. But they've got to think about capital gains tax, especially if there's a crackdown, right?
Yeah, so for capital gains tax, I was going to mention earlier, there was something you mentioned about rule changes and how is a taxpayer meant to
Yeah.
know if the rules change. About 10 years ago, we introduced non-resident capital gains tax for UK residential property. And expats that had left the UK were selling their UK homes. Prior to the change, non-residents didn't pay capital gains tax in the UK whatsoever. The NRCGT rules came in, and all of a sudden, expats were required to declare and tax gains on the sale of their UK residential properties. Lots filed late, and HMRC penalised them and didn't accept the fact that they weren't aware of the rule change, because the onus is on the taxpayer to self-assess and get it right and to make themselves aware of those things. So in the scenario where now we might have people leaving the UK wanting to get out of the UK income tax and estate tax net, we've got special rules for non-residents. Most income and capital gains won't be subject to UK tax once you're non-resident, providing they remain non-resident for more than 5 years, with the exception of the sale of UK residential property or UK commercial property, that you still have an ongoing UK reporting obligation and potential UK tax exposure for.
Okay.
Um,
My understanding. So I mean, capital gains tax is one of the biggest inquiries that we get. There's a lot of we've run webinars around this content, but it's when we started in 2012, capital gains tax, sorry, 2012, 2013, capital gains tax, it was one of the kind of key areas that people just constantly had questions about. And then the rules changed in 2015 and people had more questions about it. So it's one of those things that it's always kind of there and people generally just don't think about it. And one of the things that people say about us, and it's basically our entire branding strategy for going forward. Experts or expats has been pretty kind of like people hear about us, read about us, and things like that, but they don't really know about us. So we're kind of pushing that. But it's all about like kind of secrets, right? If you're not in the UK and you don't really particularly pay attention to UK media, how will you ever find this stuff out? And you suddenly get a letter from HMRC just saying, actually, we've spotted you've done this. So how do expats know? Like if they're not keeping abreast. So say for example that I can't remember how many millions of British expats there are living abroad. Let's say that we've missed half of them. How do they find out like what their tax obligations are if they're not paying attention? And what's the likelihood that they're actually going to get hit?
So your last question there, what's the likelihood that they'll get hit? So all major kind of territories and jurisdictions are now sharing information under common reporting standards, tax information exchange agreements. So if there's a transaction in the US and it's connected to someone in the UK, the US tell the UK about it, vice versa. Same with France, Germany, Australia, wherever it might be. There's lots of information being passed. And that's how they find out. From the sale of UK property, obviously the land registry share information with the UK tax office, and they again do, they've got some clever computer system that does all the match up and finds people. We see a lot of UK residents that have overseas capital gains or overseas investment income that receive letters from HMRC where they've received some kind of data, whether it be Mr. X has got a bank account in the Cayman Islands or somewhere, and HMRC have been told about it. They then issue these offshore income and gain nudge letters, prompting the taxpayer to make a disclosure, and we can help them kind of make those disclosures and regularize things. What should expats do in order to keep knowledgeable on all of this? They should sign up to your website, Rob.
I mean, obviously, this is all staged and everything. Yeah, of course.
We speak to a lot of people who think they know the answers and don't, where they do their own research and all of that type of things. We find with the introductions that we speak to from you, a lot of those expats have done their research and they might think they know the answer. Sometimes they're right, and we have a quick discovery call with them, and we can give them assurance that they're on the right track and they might not need advice. Some I guess are making quite royal mistakes where they've self-advised themselves, and we can help them kind of regularize things. And but the starting point is to be having those conversations with professionals, I think, and getting the right advice. Don't rely on technology or Google or wherever you get your information from, because it's a fast kind of changing world, and the rules are changing. Expats searching for advice and guidance now will probably get lots of answers based on the old rules. There won't be much out there on the new regimes that apply.
So are you seeing like, or have you seen a shift in what people are kind of, because we've seen a shift in the inquiries that we've received, but have you seen a change in what the questions people are asking you, and like the reasons that they're coming to you are changing, or not really much has changed? How busy are you around this at the moment?
We are busy. The type of advice we're giving hasn't really changed. Some of the answers and the outcomes and the solutions for the clients are changing, but we're still really just focused on robust entry and exit planning, robust residency planning. We're seeing a trend with clients that want to leave the UK but continue to work here. So we're doing kind of dual residency planning, helping clients move their families perhaps to Switzerland or somewhere like that. But for the earner in the family to keep commuting back to the UK to work some of their time and trying to optimize things in that way. So we're seeing a bit of a change in clients' behavior, I think, is the answer to your question, and just trying to be a bit more nimble around residency planning. Where people are being forced to the UK, we're giving a lot of advice now about, around how much time they can spend here whilst maintaining non-residence and that type of thing.
Okay, so I mean, tax year starts soon, or new tax year starts soon. Can you foresee it? Like, the changes in the last 12 months have been quite, I mean, as you say, they're huge. They're massive changes that we haven't really seen the likes of for quite a while. Do you foresee any major changes now that we've got a Labour government or anything like that? Or do you think that actually it will settle for a bit and this will just dust in? Or do you foresee other changes coming in?
Any other changes are quite speculative. I think the big change that the UK might see at some point in the future, but this could be many years down the road, would be the introduction of an exit tax.
Okay.
So where there has been a flight of wealth from the UK, it's possible that we would introduce an exit tax, which effectively looks to charge capital gains tax in the year that a UK resident taxpayer would leave the UK. The tax office would look at their assets, their unrealised gains, and try and charge an exit tax based on their unrealised gains. We're a million miles away from that at the moment, but I think that is a big area that the government may well be looking at. They have these exit taxes in other jurisdictions, US, Canada, Denmark, and places. So that's what I would expect.
Okay, cool. And if there was one thing that people should kind of like think about in the new tax year, like what would you say? Like from say the sixth of April, right? If you're going to do one thing this year around your taxes, you should do this. Thinking more about British expats and people living in the UK, but there's one thing you should do. What do you reckon that is?
It's a tough question because planning and the opportunities and optimizing them are really personal and bespoke to every taxpayer. Some won't need to do anything. Depend, if some will need to do something, and that might be, if you're a non-dom that was claiming the remittance basis and you're here, you should be taking advice now around the temporary repatriation facility.
Okay.
If you're just arriving in the UK and you're an expat worker, you should be taking advice now around overseas work days relief. If you're looking to leave the UK and become non-resident, then you should be taking exit advice in order to ensure that you do that optimally, and you don't do anything which inadvertently makes you UK resident or brings your income and gains back into UK charge.
So is it fair to say then, basically, if you're expecting status quo for the next sort of 5 to 10 years or so, meh, carry on. But if
You
you
know,
actually anticipate a life-changing event happening in sort of like between 1 and 3 years or so, actually like get advice.
Yeah, absolutely. Yeah, yeah. If you're maintaining the status quo, do all the good conventional planning. Make sure you're doing all your getting good investment advice, doing your pension planning, and doing all of that. The UK doesn't have, if you're long-term resident and you've got all your ducks in a row in that regard, the UK is fairly straightforward.
Okay, cool. Well, I, I didn't realize we've been talking for quite so long. My notes just my notes just turned themselves off. It's been that long. I've really enjoyed this chat. So thank you very much for spending the time and for going through this. I've learned a lot. I hope other people have as well. So I really appreciate it. Thank you very much.
Thanks, Rob.
Cool, thank you. And for anybody who found this enjoyable and interesting, we're going to be doing a lot more of these interviews or these conversations with our partners, with other experts in the kind of expat world. So yeah, sign up for the latest notifications through our community on experts.expats.com. And of course, you can request an introduction to people like Jamie through our introduction services. We'll connect you with someone, and they'll offer you an initial discovery call where you can chat through your requirements. But yeah, once again, thank you very much, Jamie, and goodbye. Thank you everyone for listening. Cheers.
Cheers, Rob. Thanks.